Hi everyone, my name is Lori and we're going to talk about the new overtime deduction. Yes, it's part of the new tax bill and I'm sure many of you are wondering, how does this impact me? How much is this worth to me? Well, we're going to go through that. If you are single and you normally take the standard deduction, and you make less than $150,000, this might be something that helps you out this year. So we're going to go through an example and we're going to use a person as this chart describes. This is a person who has regular income. They make $30 an hour. They work 52 weeks a year and 40 hours a week. And their regular pay is $62,400 if we just simply calculate that. Now, this person also has overtime and they get their hourly rate of $30 an hour, but they also get time and a half. They get the half, which is an extra $15 an hour. So in this example, 50 weeks with 15 hours of overtime a week, which would give them regular pay of 22,500 and overtime, the time and the half, the time and a half, so the half part is 11,250. Now, the first thing that you need to understand is the 11,250, that is the deduction. You don't get this part too, the regular pay part. You get the half. That's actually the rule. It's like qualified compensation is what they call it. And it's really just the half portion. The other thing you should know is that there is a limit. You can get it up to 12,500 is the cap on that. And again, you can't make more than 150,000 a year where it starts phasing out. So that's a scenario. I'm going to close this up and I'm going to open up a new area. Okay, so in our example above, we discussed that the person is making 62,400 plus these two pieces of overtime. So we're going to add all that up and call that our income for this year, because our assumption is that we're not making any other income except for this. We don't have a side business or anything like that. We are going to now be able to report the overtime deduction. And like we just talked about, it's the half. So we're going to put in this cell, we have to minus that. We're going to put in there just the half of overtime. Then we also get to deduct the standard deduction, and this is what everybody gets. Everybody gets a standard deduction unless they have so many other kinds of deductions through houses and huge, large amounts of state tax that makes them go over this limit, then you would want to itemize. But for simplicity, we're assuming you're just using the standard deduction, which is 15,750 for a single person. Again, our example is single. This number is different if you're a senior. And now we have a total taxable income of 69,150. Now, if we look down here, what I'm trying to demonstrate in this area is the brackets. This is how we're going to flow the 69,150 into all the different brackets to determine the taxes that are due. So as an example, we're going to take this amount and we're going to fill up these brackets over here. So this 11,925 is going to fill up the first bracket. It gets times by 10% to give our tax due. Then we get another 36,550 because it's the difference between this 11,925 bracket and the 48,478 bracket. So that's an additional 36,550, and that gets a tax rate of 12%. And then the remainder to total up these three things to be the 69,150 taxable income, the remainder goes in this bucket and it's at 22%. And this is important to understand because this 20% is this person's marginal tax rate. Because as you see, as your income goes up in America, your tax rate goes up. When you add up all the taxes due, it comes to 10,127. Now, if we just put that number aside here and we delete out the overtime, we're talking, it would be 12, if we deleted out the overtime, it would be $12,602 in federal taxes versus the 10,000. So if we just take a difference between those two, we're talking about a savings of $2,475 for this person. So that's actually a really, actually a pretty big amount of savings for somebody who, makes 96,150 and again has an hourly rate of $30 an hour. If we want to change the rate, like, well, what does this mean for somebody who only maybe makes 20 an hour? Somebody at 20 an hour is going to get, um, obviously is going to make a lower amount of money, but it's going to be, we add up the same, it's the same math. We just lowered the rates. We're assuming all the same things. And somebody like this, if they get their deduction, their deduction is worth 466,4664. And if they don't have their deduction, it's 5,564. So we're talking about a $900 difference for this person. And that is how different it can be for each person depending on how much money they make. So it's really important to understand your specific situation. And again, this is just a single person um, that, you know, that's making this level of income. That is our first episode. I hope that helped you. And see you next time.